Hello, everybody. Welcome to the Talk With Kiet podcast, where we help connect ideas, people, and capital to make a difference in the world. Today, I am on with Marla Shapiro. Marla is the founder and CEO of HERmesa. Marla and I today will talk about her extensive career and entrepreneurial journey, as well as discuss how to generate alpha by investing in women. Now, before we start, I just want to say to the audience, happy St. Patrick's Day. I realize I'm not in green today, but happy St. Patrick's Day, everyone. And Marla, welcome to the podcast.
Thanks, Kit. I forgot it was St. Patrick's Day. Indeed, happy St. Patrick's Day to all who celebrate, which in America is everybody.
At least the drinking part, yes.
At least the drinking part, yeah. So go ahead.
No, go on.
No, I was just going to say, I'm here, which we'll get to in a minute, from London, which for obvious reasons, we don't celebrate St. Patrick's Day so much in the UK. We that's not as much celebrated.
That's right. So Marla, thank you for being on today. And as part of tradition, this podcast, where we start is really the origin story. And, understanding someone's origin story of how they got here, to me, it's been extremely insightful for the audience to learn from. And so what is the origin story for Marla?
Oh my God, the origin story. So I, as I said, despite the accent, I am both American and British. I've lived in the UK the last 20 years, but I'm originally from a small town in the middle of Michigan called Mount Pleasant, Michigan. Both my parents were first generation Americans. My dad was a professor, and I grew up in college towns. I actually didn't live in a college town until I graduated from university myself. I studied at the University of Michigan undergrad, went to New York right after graduation, like a farm girl in a big city, and we can talk about that. And I had an early career in investment banking, in finance, which did not take. And again, we can dig into that. It was pretty clear after a few roles that it wasn't right for me or my employer. And so most of my career then, I got my first corporate job working for the FT.com 1 month before the dot-com collapse. So in 2001, I guess they hired me March 2001, the FT was expanding to the US. They hired me and they said, don't worry about making out any money out of content online. We just want eyeballs. And then a month later, they came to me and said, we need to make some money. And so my career followed the speed of the internet and the disruption of the media industry. So I worked in print after Craigslist destroyed the business model and eyeballs were no longer enough. I moved to the UK after Napster destroyed the music business and worked in music publishing to try to find a new revenue model and embrace technology in music. And ultimately, after about 10 years of being in a big company trying to adapt to technology, I went to the other side and worked in 3 media tech startups in Sweden, Finland, and the UK for tech companies trying to sell back into media businesses. So I can do both sides of that sales conversation, both from the big and the small side. After the last startup kind of faded, it was like no product market fit. I was stuck. I wasn't quite sure what to do next, but I loved being in startups. I wasn't sure I just had the appetite to do another startup. I started mentoring at Imperial College, which for people who don't know is basically the MIT of the UK. And I loved it. I loved being around all these entrepreneurs and seeing a lot of businesses. And a friend at that time was starting to angel invest. And I said, I couldn't possibly do it. I mean, I only have a background in finance, big companies, startups, and mentorship. I mean, obviously, but I didn't see it. I didn't see myself being an angel. I didn't understand very much. And he took me under his wing, taught me how to angel invest. And that was 5 years ago. And I'm now a full-time angel investor and run a angel syndicate here in the UK, made up predominantly of women operators turned angels backing women.
So how did the idea of HERmesa start, and how do you get the name HERmesa?
So it started by the way my entire career has been being the only woman in the room. So this friend, this man who taught me, really how to angel invest, he is a fantastic investor, very, very thoughtful. And he introduced me to a green tech angel syndicate in the UK. Also fantastic, super welcoming, super, super smart people who were really willing to share. But within 6 months, I knew every other female green tech investor in the UK because there were only about 20 of us. And, I sat in these pitch events where companies were pitching to solve the problem, to solve the future, right? Solving all of the problems of climate, of energy, sustainability. And I saw white men picking the companies of the future and white men building the companies of the future. And I thought, this can't, like, you got to be kidding me. Because I started working on Wall Street. My first job was actually tech on Wall Street. I was constantly the only woman. And I think I got to the point where I said, this is bullshit. I mean, I can't think of another word. And you know how they talk about, as an entrepreneur, like, what makes you start a business? You just can't get this idea out of your mind. And I said, somebody should be doing something to get more women a seat at the table as investors, so women can put their view forward as to what companies should be in the future. And I'm not saying that we need to have women to invest in femtech. We can talk about that. I don't care what women want to invest in, but if you exclude half the population from making decisions, or half the population from building solutions, I don't think we're getting the most robust outcome. And I kept saying, somebody should do something. And that friend who kind of taught me to angel invest, he said, well, if you think you can do this, then, why don't you try? So it's a little bit of a glib answer to the fact that I then did an 18-month deep dive as to why women don't angel invest, why women aren't funded, and why that is bad business. And as we talked about it, we kept saying we want to give women a seat at the table, a seat at the table. And I was my husband's Spanish. I was hiking in Spain. I was trying to come up with a name for this business. So I was sort of half speaking Spanish, half English. And finally I was like, oh, mesa, table in Spanish, HERmesa, her table. So that's the name. We want a really big table for a new group of women to fund and found the future.
No, that's a great name as well. First time I heard, I'm like, wow, that's actually a really good name.
Well, listen, our other name we got a cease and desist order on. It was Invest Her, which somebody else already had. So all the good names have her. But yeah, we, kind of like having your own children. You imbue it with meaning over time.
Yeah, and before we deep dive into the topic of investing in women, I think part of it as well is I love the way you have perspective on thinking through the failure resume.
Yeah.
Right? When you talk to everyone, they talk about the success and everything they've done right, but not enough in embracing the failure. So talk a bit about that concept of the failure resume.
Yeah. So as I said, I had just finished with this startup that was actually the last startup I worked at was selling back into the newspaper industry, still trying to solve that problem of monetization of content. And it wasn't working. And I was like, I need to do something next. And I would sit down at my desk and I literally would look at the wall and I couldn't come up with anything. Like, it was like I just looked at a white wall. So I am nothing if not a good student. So I found a course online called something like Creativity in the Entrepreneurial Journey for Engineers. Now, I'm not an engineer, but I think like an engineer. So I took this Coursera course, and the entire point of the course was to teach engineers, or people who think like them, to not be so prescriptive, to be comfortable with failure. So they had us do, and only once you're comfortable with failure can you then be creative to come up with a new solution. And so you can tell people this, but if you're a good student whose entire career has been getting the answer right, it's hard to be comfortable with the wrong answer. So they had us do these silly experiments. One, we had to build a tower of shoes, and of course it's impossible. It falls. You're supposed to get comfortable. But the best thing we did was they had us write a CV or a resume of failure. So I can tell my whole story about how I was successful here and then it led to this, but nobody talks about all the times they failed and then what happened as a result of that failure. So the exercise was to take your career and write everything that went wrong at every single point in your life. I didn't get into law school, which is the case. Thank God, because subsequently I would have hated being a lawyer, So I had to go to this university and not that. So we went through the failure, and then you flip it over and say, these are all the things that happened because of the failure. And for me, it was a life-changing event. It was a MOOC, so I could see everybody else's failure. And it was really freeing. So as we talked about, Kit, like I have been fired more than once, actually 3 times in my career, although once was at a fast food restaurant because I forgot to show up when I was 16. So I don't think that counts. But
Write that one off.
we can write that one off. But when I was a junior investment banker covering the TMT industry, I was at a big bank selling equity derivatives, covering California at the time when everything was going off, and I loved it. I loved talking to my clients. It was much more interesting than what I was doing. But I just could not figure out the politics where I was working. Investment banks are notorious for being backstabbing bastards. And I just couldn't play the game. I couldn't figure it out. And I got fired. And that was like, it was like, I never tell the story. Like I always say, oh, it didn't fit. And then I moved. But it didn't fit because they fired me. But once I wrote that resume of failure and thought, I was fired, I couldn't move it sideways into another job in the bank. I had been trying to do that. And I was forced, after being in 3 different banks in 6 years, moving every 2 years, to realize that banking just did not fit me. Culturally, it did not fit me. And I had a little bit of money from that firing, that payoff. I had paid off thank God, my student loans. And I had time to think. And I thought, I'd really rather be the client than service the client. And it changed my life. And seeing other people's failure in this MOOC, I remember a woman who was in a group and her boss hated her. And he got her moved sideways. And that group, that new boss thought she was fantastic. And he made her career. And I think everybody has these stories. So I think, as we talked about, Kit, like, it's really, really uncomfortable to sit with failure, particularly, obviously, I know I'm in the UK, but I'm American. I love to succeed. I love to sell. I love to share the best, shiniest version of myself. But I think that only through getting rid of some of the shame and embracing failure for the opportunity that it brings is how we really grow. And now that I have my own business, and of course, having been through 3 startups as well, you really get comfortable. I hate that expression, fail fast, but you do need to fail fast. You do need to kind of get away from the emotion of failing and say, what can I learn from this? But it's not so easy. So I would just recommend to anybody who's struggling with it or not sure what's going on with their own career, write that CV of failure. It's the most freeing thing you can ever do.
No, 1,000%. And I do think there's a saying I love to use, that is, if you haven't failed enough, which means you haven't tried hard enough, right? And I think people need to realize, like, through failure there will be growth.
100%. But sometimes it's we say these things, but it's pretty hard. It's pretty hard to try.
It is. It is. And so back to the topic, though, in terms of having a seat at the table and changing the landscape for investing in women. Like we're still not seeing enough from the statistics, right?
But they're not moving at all.
No, but what we do know, listen, this came from Kevin O'Leary, so I didn't throw this stat out. Kevin O'Leary says 75% of his returns were returns from investing in women. So obviously we know there is alpha generating investing in women, because women tend to be more thoughtful, right? They don't like to fake it till they make it, right? They got to be very certain with their thought process, they're very open and honest. So the question is, how do we do better to change that situation, and what's driving the situation when there's not enough capital towards women?
Okay, so there's so many questions. Okay, let's see. So first of all, as I said, like, let's talk about the sad statistics. Okay, we're not going to go through all of them, but hardly any women are investors, right? I think in the UK, it's something like 10%, under 10% of women have a VC decision investment partner level. investment discretion, sorry. 14% of women are angel investors, but if you look at people who've invested in more than a couple of companies, it's something like 0.5%. So it really is a bunch of men investing in men. Now, why is that? I mean, there's a lot of reasons. People say it's a pipeline problem. Women are not in STEM at the same rate as men. Well, if you assume that every single woman founder has to be a STEM graduate, which is clearly not the case, it's still double the number. Something, I looked it up, 35% of women graduate from UK universities in STEM, but they only get 16% of the capital. Okay, so it can't be that. Plus, you can always have a non-technical founder too, right?
That's right.
So I don't think it's a pipeline problem. I think it is, okay, so that's the first thing. The second thing is, if you don't come from a privileged background, a middle class or above background, you cannot access that very, very first friends and family capital that allows you to build an MVP, that allows you to get a little bit of traction. That, I think, is a huge problem, particularly for people who don't come from a middle class background. We back all women founders in our portfolio. And I mean, I can tell you, none of them grew up in a council flat, as they would say. You have to have some way to access. So I think that's a huge problem for a huge percent of underrepresented founders. But let's assume that you are able to build. Why aren't you getting funded? I think it's bias. And the reason I think this is because there's a lot of studies, but my favorite or my least favorite study comes from MIT. I believe it was Dr. Fiona Murray did an experiment where she had pitch A and pitch B delivered by women and then delivered by men. So women would pitch A and then women would pitch B and vice versa. And it didn't, the same pitch deck, the same script, but the investors voted men 6 times more credible and more likely to receive funding than women, even though it was the same pitch deck and the same words. The mere act of pitching while female reduces your chance of receiving funding by 6 times. So this doesn't have anything to do with the pipeline problem. And the reason that this bias, this pattern matching, there's a lot, but I think we think that founders are supposed to look like Mark Zuckerberg, right? They're not supposed to be 40-year-old women in their 40s with 4 kids, for example. And the second thing, though, is pattern matching. Everybody is drowning in deal flow. And how do you know what the good deals are? You take the deals that your friends tell you. You take the deals that look like somebody who's been a repeat founder. And these are all men, introducing men and sharing men. So I think that the answer is easy. You need to invest in women, and then we can fix the stats. How do we do that? I think firms need to be much more conscious about how they source deals, who they source deals, who are their buddies, who they feed deals from. And I think larger funds, later stage funds, should be doing blind, looking at the pitch deck, not at the founder. Obviously, early stage, you can't do that, but looking more at metrics. And the same as blind recruiting, at least on the first scan, to make it through.
Yeah. And what would your advice be for women founders, like in the, knowing the game that's being played and the situation that they're in? Are there anything they can do differently?
Well, there are a lot of programs for female founders telling women what to do. But as we like to say at HERmesa, women are over-mentored and underfunded. So, but if you need to engender confidence in somebody who doesn't quite believe in your story, there is a lot of advice out there about that you need to pitch much more confidently. You need to tell your story. I think this is, was it TechCrunch, the famous study where women were asked preventive questions? How are you not going to lose my money? And men were asked, how big is it going to get? And so women are coached to sort of take all of those preventive questions and turn them into promotion questions. I think there are things that you can do. And I will say that I will sometimes see female founders who come to me I mean, we're women backing women. Part of the reason we do, we'll talk about that as well. Part of the reason we do that is that women have the same biases as men. We come from the same media environment. We're more likely to fund women, but we're not conditioned to be gender neutral ourselves. So I love academic studies. So there was a real study again that talked about how do you get rid of bias. One is you have a fund that only invests in a certain class of founders. So you're comparing apples to apples. And two, you do it gender blind metric. And so HERmesa, because we're so early, we do women backing women. We're only comparing women to each other. But even in that scenario, I see some women who are just pitching like men, and women who are pitching like women and telling me, like, I really think I can do 30% next year. 30%, you can do more. You're already at 25%, you know, like, so I think that women need to, I think it's a little bit of a confidence thing, a little bit of telling the story the way investors want to hear it. But I don't think the burden should be really on women to change how they act. I think the burden should be on men to listen to women. I have to tell you a great story. I was mentoring at Imperial, and two women founders were pitching. One was pitching a lead recycling business, and the second one was a new class of nursing bras made of athletic fabric. You know, it's a student thing, so you get everything. And the man next to me, an old white British man, investor, when the woman was talking about the bras, he couldn't keep a single figure in his head. Like, he was like, I don't even know how much they cost. How would I know what a bra costs? And I'm like, she just said it 3 seconds ago. You know, the unit cost is X. And it was, the guy couldn't get his head around bras. But when the woman talked about lead recycling, he was the first one out of his chair to run up and give her his business card. So I think sometimes investors need to think like investors. Like, you don't need to know the topic. You need to think like an investor. Is there a problem? Does the solution fit? Is there a big market? Does the founder have experience? Not, would my wife buy it? Or do I understand the product because ladies buy it?
No, that's right. And then how about on the other side of the coin is, how do we get more women to be investors or to be an angel?
Yeah, that's my favorite topic, right? Why don't women invest? Well, as a there's a lot of reasons. Again, lots and lots of reasons. Women earn less than men. Women are less likely to be exited entrepreneurs, which is the single, you know, if you don't fund women, then they can't exit, then they can't fund again. But there's a lot of media gender norms around women. We're supposed to use our money to pay for childcare, and we're not supposed to use our money to pay for risky investments. So there's a lot of constraints culturally. And so what is super interesting to me is when I recruit people to invest through HERmesa who have never angel invested, half of our investors have never written a check before they joined us. The first thing women tell me is, I want to help other women. So most of my investors are entrepreneurs, anywhere from sort of kitchen table through to unicorns, with lots of failures in between, lots of learning, and so much learning. But every single woman comes and tells me, oh, I want to help. You know, I was a woman or I am a woman entrepreneur. I want to pay it forward. I want to help. Because culturally, there's a sense that women can't just be here to make money. We have to help with our money. And you see that women as a class over-invest in social impact ventures, because we have to help. Again, I think this is all a construct. I think it's all around gender norms. But once women join HERmesa, they invest just like men. I mean, like, forget all that talk. Of course we want to help. We're angel investors. That's why we do this actively. Otherwise, we'd give someone else our money to manage. But we look at investments just like anybody would look at an investment. Who's going to win in this space? Are you the right founder? How do I get my money back? But the way you get women into investing is you provide a space where they're comfortable to ask questions. You provide a space where they're not mansplained to, either as founders or funders. And that's really the magic of HERmesa, literally, is that it's a community where we let everybody show up as they are. We value their expertise. We let people. We have a culture where people can ask questions, and we have a construct that makes them comfortable taking that first step around women supporting women.
No, that's brilliant. And then I guess let's talk about deal flow, right? Like we've seen what happened, and I know we're not gonna touch on the details of Silicon Valley Bank or Signature or what have you. But what's the situation now with deal flow?
Deal flow, deal flow, deal flow. So deal flow is like the biggest pain in my life, right? Because there's too much deal flow and not enough good deal flow. The question is, what's a good deal, right? But so actually, here's an interesting thing that well, I don't know if it's interesting, but when we talk about women raising money, I think one thing that happens is a lot of women who have businesses, or men, but particularly women, have businesses that are more kitchen, what we call kitchen table businesses, or you'll bootstrap capital or invoice finance, whatever they are, they're not venture backable. So I think that's the first thing. So I think that as a women led syndicate backing women entrepreneurs, I get far too many businesses that are not venture backable. Like, we're just not going to invest in a fashion line. I mean, I guess some VCs do that, but we like to invest in
Yeah.
tech and IP driven businesses. So the question of good deal flow is, how do we get those women founders who are who have businesses that are venture backable, that have that right magic? How do we get to be a part? How do we get to see those deals, and how do we earn our seat, HERmesa, at that table of to get involved in those deals? So when we started 3 years ago with like 5 people literally sitting around a table saying, let's invest together. I think we've really earned our seat at the table. I think that we bring a lot of value through our network and through our community of again, operators and entrepreneurs as investors. But it's always about trying to sort through those deals. What I'm seeing now, since so we had a crazy first 8 months in 2021, and we didn't close anything from the third week of August until the third week of January 2023.
Wow.
Nothing could get closed because we don't lead rounds. We'll participate, but we won't lead. And so this year we are way off of our numbers for what we thought we were going to fund, because the deal flow is there. The funding is not there. And the quality, even among venture backable deals, I think has fallen, because we're in this situation where if you have capital, there's no way you're going out to market at these lower, poor valuations. I joke, it's like when the housing market falls, the buyers are like, well, I want your house for 30% less. And the seller says, but my house was worth 30% more last week. I'm not selling. So, that the market freezes. That's what we're really seeing here in London. Anybody who's good, who has dry powder, has capital in the bank, is staying as far away from fundraising as possible and trying to eke that out. So the deal flow, again, is the people who are really running out of money and can't wait any longer.
Yeah. And so what is your advice? Because the conditions is very challenging now for startups, especially raising capital, right? I think besides the pre-seed seed, I think there's still capital going through there. So, I mean, what is your advice to founders?
Yeah, but less.
But less,
my,
yeah, exactly.
Yeah, my advice to founders is, well, we're doing an alternative capital webinar for some of our founders, is, you need to be really, really, really thoughtful and clever and think about how you can raise money. Do you have revenue? Can you do invoice financing? The terms aren't great. I think that particularly for some of our startups in our portfolio that they just need money, like they're the kind of businesses that are going to eat money for a lot more years, you have a choice. You either take massive dilution in a down round, if you can get the money, or you fold. And if we still fund, somebody asked me a question today, a founder. She said, so how do you think about, like, what kind of traction do I need for you to invest? And are you going to invest in me in a down round? And I said, these are two separate questions. The first question is, do I fundamentally believe in the business? Do I believe that even if the funding markets are difficult, this is a business that should survive and that you're going to win? That's the first question. And then how much do I have to pay for it, or how much dilution do I have to take if I'm an existing investor, right? That's the second question. But I think that if your business is worth surviving, then you have to take what money is on offer to make sure you can get to the other side. I don't know. What is your view on that? That's my view.
No, but that's
not
great
very
advice, right?
charitable.
Because like, you talk to a lot of founders, and to your point, right? It's like my house was X 2 weeks ago, and now it's 30% less. I can't. But the question is, if you don't take a deal, you will not have a house, right?
Yeah.
So, I mean, what mode are you on? But I also think it was funny, when we talked about earlier. You think about like startups of the old days, where it's like everyone's on a mac and cheese budget, and
Yeah.
where the last few years you've seen startups that are on steakhouse budget, right? Which doesn't really make sense sometimes, right? And I think having that discipline of a zero-based cost model and really trying to focus on building the right business model and generating revenue versus, we're building this big grand vision. We just use investors' money to get there. We'll fake it till we make it. Like, I think those days are over.
Those days are definitely over. And I do think that this is where being old is kind of helpful. Like in that first .com crash, some of my MBA classmates were millionaires on paper, and then they weren't. And one of my classmates said, I don't know what happened. We lost money right on schedule, just like we told the VCs. And so I think that we got a little bit back into that bubble again for the second or third time, and that the startups exactly are like that. Well, we told you that we were going to, burn through 2 million, and now we need another 5 million. Like, why are you giving me a hard time? So, yeah, I think that, and again, what is the right founder? I think sometimes founders who've been through the trenches, who've actually had a down market, those are the people to back, because they are living on macaroni and cheese. They know how to do it. They know that the spigot can be turned off. But listen, everybody knows that now.
That's
But
right.
yeah, no, I think it's a tough time. But then equally, we are closing an investment next in 2 weeks, 3 weeks, whatever, and it's in D2C, which is a very difficult sector, and it's I think 75 or 100% up. I can't remember exactly, off the last funding round.
Wow, that's
So it's an
amazing.
up round, yeah, because she's a great founder with a great business. All the metrics are there. And so I think that good businesses get funded, but and they get funded in up rounds. I think there's, maybe half then that are just, they should live, but it's going to be painful. And then the bottom half, maybe we're a bit silly money. Now, the question is, do you have some of those bottom half in your portfolio? I mean, we all like to think no, but of course the answer is yes.
Yeah,
What's
yeah,
the expression that they say, you only see who's swimming naked when the tide goes out?
that's right.
Yeah. So I think unfortunately there's probably some
Yeah,
naked swimmers in the portfolio. But I hope, because we're only 3 years into investing, but I would hope that over time, the statistics about how women return more, even with less money, they are, stronger performers, that diverse teams make better investment decisions. I hope all of this will be true in our portfolio, but it's just too early to tell. But I can say so far, nobody has gone over the waterfall. We have a few that are in the canoe that's halfway over the waterfall, but right
yeah.
now they're rowing it back. So we'll see.
Now, you growing up on the TMT space and the internet space in general, and how that's transformed over the last 20 years, right?
Mm.
Like, what are some of the sectors that interest you a lot now? Like, are there particular industry sector that HERmesa invest in, or is it just
Sorry.
general?
Sorry, my phone's going off here. So it's interesting. We're sector agnostic, which I find honestly cognitively exhausting. To look at pitch decks, one day lipstick, one day robotics, one day biopolymers, one day SaaS. But the way we handle this at HERmesa is that we have because again, we have this great base of investors. We require any deal that comes through to have a sector expert, and to take and this, talk about failure kit, this all comes from my experience. So we require startups to have at least 2 paid for pilots if they're B2B. This comes from my experience working in a startup where I took the company through a pivot. I got one massive enterprise customer who was supposed to buy us. And when they didn't, it turned out I had found the one stupid company in the market, and we could never sell to another one. So we always required, I learned from that one, two of those. And then I was in another startup where the founder didn't understand the buyer behavior. And so and the startup failed. And so ultimately, but that was part of it. But so we always ask in HERmesa to have a sector expert who really understands buyer, problem, solution, motivation, go to market, all of that stuff from the expert. And so we are sector agnostic, but that's how we kind of handle it with deep expertise really early on. What interests me personally are a couple things. Because I come from a B2B SaaS background, I am the most comfortable in that space. B2C, building a brand, having to spend to get customers. I mean, I've learned a lot about it, but that's not a comfortable place for me to invest, although I invest along amazing, brilliant brand investors. But for me personally, I love B2B SaaS. And I joke that if your product gets rid of a Google sheet, I will give you money, because I know how hard it is to sell new software. But if you're really solving that hair on fire problem for the organization, you can sell it and I'll give you money. So I like companies that have exciting channel sales models that are working. I like that, all that kind of boring tech. I think that's, for me, it's not boring at all. But equally, I really like deep science. I do not have a background in it, but I understand enough of the whole commercial side. So we co-invest with people who really understand deep science. And I think that there is just so much, not therapeutics, but we've invested, for example, in a robotic startup that's fixing science, starting with how chemists scale up in the labs. And to me, that's just tremendously exciting to see how technology can change how we work and how people can work alongside technology. And that I love as well.
Yeah, and it's amazing. I think Microsoft came out today with Copilot, right, where they integrate AI into 365. You talk about like,
I cannot wait to try that for my business. I'm wondering if that's the answer to all of my productivity challenges, that I think it might be.
Me as well. So I'm like, wow, this is great. But I guess, what is your view on that? And like how AI now is, I mean, we've been talking about AI for a while, right? And it was AI that's happening without us recognizing AI is happening, right? With search, for example. Now AI is happening with like, we're on the co-driving seat with AI. And I didn't tell a lot of people this. I did a LinkedIn post, I think like 2-3 months ago, that went viral. That post was 75% written by ChatGPT, right? And I modified it with my essence in it, but it was in partnership with AI, and the impact was tremendous.
Wow, I didn't know that. That's great. I mean, I think. So, we were talking a little bit about what the markets are going to look like this year and what's going to happen next. And I'm like, I don't know, but doesn't look good, for the short-term funding markets. The AI markets, I don't know, but gosh, is it exciting. That's, I think the future is really, really exciting. But I also, so again, all of how we leverage, how it increases productivity, how it helps correct cognitive biases. Like, I can't remember, maybe a couple of years ago, I saw a little robot that would sit alongside nurses that would help, to take some of their cognitive load off and allow nurses to focus more on patient care. All of this stuff I think is fascinating. What I think is a question that I haven't seen as much being talked about in the tech space versus the policy space is, who does this leave behind? And what does that mean for society? The same way that we had manufacturing automation and it left behind a whole class of workers. If we now have to get rid of junior coders, for example, I read this really great thing that said, what the future is? It's humanities majors, because ChatGPT can do, all that basic coding. You don't need somebody to be like, a junior coder. The AI can handle that. What you need is that higher level thinking. But I don't know if it's true, but it sure does talk about a huge displacement in society. And I think that is the ethics of AI, how it's implemented, to me, is supremely interesting, while alongside, I'm totally going to try to use it as part of my workflow. Well, and of course, to invest in it.
No, but, I had a chat with Ian, who runs an AI forum. And the question is, how do you make sure there's no bias in the AI code?
It's all biased. It's all biased. We invested in a startup that is working with makeup to see like what makeup works good on your
Yeah.
what looks good on you. And the reason we backed this particular founder, she's a Black woman. We invested in September 2021, and she was at that time the 10th Black woman in the UK to ever receive VC equity. Just
Wow.
to have, 10. And the reason that this one woman had, was solving like the AI facial recognition, it's a really tricky problem. It's very hard for AI to recognize Black faces. And I think it was Amazon at the time, the 30% of it, they couldn't even recognize that it was a woman. And this particular founder had 30,000 non-commercial, private images that Black women had uploaded of their faces, and she was training the model on that. I mean, so can this one particular founder in the UK crack the problem that thousands of engineers can't? I don't know. But the fact that it's such a problem, it's because those models are biased, and she was building an unbiased model. And we thought that was very, very exciting and very valuable. So yeah, bias in AI is horrible, isn't it?
No,
I mean,
it is.
it's all baked in. So if we say that, like, let's look at all the data going back to founders. If we say that 80% of the money goes to all white male teams, we're just baking in that cognitive bias that the VCs have, right? Well, let's pattern match.
Yeah, and it's
Okay,
magnifying
so
the problem.
you went to Stanford, you went to Harvard, you used to work at Google. It's those are the signs, right? It gets all baked in.
That's right. That's right.
Yeah, I think it is baked in. It's already there, and it's only going to get worse. So, who polices the AI? And then the other question is, because again, I'm not probably technical enough to know this, what happens when it just goes off on its own? Will the computers eat us?
Oh, when it goes sentient. Yeah, that's
Yes.
different. Terminator will be back.
Exactly.
So
But no, I don't know. I don't know what you think about it, but I think that's I think there's a huge problem. I think we have bias already. We already have bias in the models. What's going to happen next?
yeah,
It's going to take a real concerted effort and a transparent audit, which I don't think is going to be available. Who wants their code audited and having that shared?
yeah. But I do think there's certain areas of hope. The CTO of OpenAI is a woman, right? So I think that's a good sign. I do think as a society we do need to be mindful of the power of AI, but also the danger of AI, right?
Mm.
And I think that the way you coin it is right, where AI is more augmented intelligence versus artificial intelligence, where it's really in partnership, right, with the human.
Ideally, yeah.
And ideally, I think what it's doing, if it's operating the way we envision it, is it empowers the creative in a much faster fashion, in a way where, hey, it's just like today, if I have a new idea for a clothing line design, I don't need to know how to manufacture it. I just design it, and all the other pieces, right, whether it's a 3D printer, whether it's what have you, and whether it's Shopify, it enables me to accelerate my creative. And I think if done execute correctly, it could be quite powerful for the creative. But again,
I think so too. I think technology is going to save us. I do believe that. I mean,
yeah.
obviously, right? That's why I've been in technology. I like technology. I invest in technology, but I think we have to be thoughtful about it. But
No,
yeah,
exactly.
that's the hope. That's the hope.
So,
And let's make sure we back those women who are building the solutions.
no, 1,000%, 1,000%. I just want to say thank you, Marla, for being on the podcast. It was great. It's an amazing conversation. And usually where we ended is the question for you is, how can the audience help you? What are the people you want to connect with? And for the audience that are listening, how can they help you? And
Absolutely. So HERmesa exists for two reasons. We want to get more capital to great women founders so they can build the future unicorns, the future successful companies of the future, and we want to give more women as investors a seat at the table. So the ask is, first of all around deal flow. We want to be able to support and add value to some of those great female entrepreneurs. So we would love to connect with any other angels, early stage VCs. to co-invest, to share deal flow. And in particular, we did talk about this, Kit, as our portfolio grows up and they're trying to raise Series A. We would love to talk to some investors who are interested in backing, some pretty strong, proven female founders who are now ready for Series A. The second thing we would like to do is to invite any women or aligned men, because we do invest, co-invest with men. We believe in diversity of investing, to join HERmesa. We have no joining fee. We only charge on execution. And we are really always keen to bring people who have been entrepreneurs or who have great functional knowledge and want to learn, collaborate, invest, make money, and help women entrepreneurs of the future.
Great. Thank you, Marla. And for those that are listening, if you want to connect with someone that's already have a great pre-vetted, diversified portfolio of great women leaders, please reach out to Marla HERmesa.
I should give my website, shouldn't I? So it's
yes.
It's HERmesa, HERmesa.co.uk, because we're here in the UK, so it's .co.uk.
Awesome. But I will also say, for VC funds or funds that are looking to deploy capital in interesting Series A startups that are already vetted by a great, amazing group, please also give Marla a call and reach out.
Absolutely.
So thank you, Marla, for being on.
Oh, no, thank you. It's such a pleasure to speak with you, and thanks so much for inviting me. I do hope people found it valuable.
It's tremendously valuable. And thank you, everyone, for continuing to listen and support our channel. Have a good week. Bye-bye, everybody.
Bye now, Kit. Bye.